is Priyanka. Time for daily market updates. Tuesday's trade witnessed cement stocks continue their upward momentum for the second consecutive day after the lower house approved the amendments to the MMR Act. With the interest waiver case on loan moratorium decided today, investors' value picked on PSU banks selectively. In the broader market, fertilizer stocks saw demand on receipt of subsidy payment. Today, Indian market bounced back after closing flat in the previous trading session, supported by a rally in the market space post the Supreme Court verdict on the moratorium. Bulls took control of D Street, pushing the Nifty above 14,800 while the S&P BSE Sensex closed above 15,000. Let's look at the final tally on D Street. The S&P BSE Sensex rose 280 points to 50,051 while the Nifty closed 78 points higher at 14,814. Thus, Nifty formed a bullish candle on the daily scale and negated the formation of the lower highs of the last 6 trading sessions. Analysts suggest that Nifty has to hold about 14,750 to witness an up move towards 14,900 and 15,000 levels, while on the downside, immediate support exists at 14,700, then 14,600. Our researchers pointed out that the 50-day moving average was a major hurdle for the market, and now Nifty could move closer to 14,950 to 15,000. Support is still seen at 14,570 levels. The formation of double bottom in the Bank Nifty is working positively. The Bank Nifty is expected to move closer to 35,000 levels to maintain a stop loss at 33,850 levels. Last year, on the same day, the Indian market had made a low point of 7,500 as the outbreak of coronavirus pandemic spooked investors. While COVID-19 still persists as a grave risk, the ongoing vaccination drive and improvement in some economic indicators underpin the sentiment. Sensex closed 280 points higher at 50,051 while Nifty settled at 14,814, up by 78 points. The market opened in green and witnessed some volatility during the session. However, it managed to end higher as bank stocks supported the rally after the Supreme Court refused to grant interest waivers and extend the moratorium period. Domestic markets ended the day on a strong footing supported by a rally in banking stocks amidst weak cues from global markets. Sentiments in the banking stocks were lifted post Supreme Court order against granting interest and extension of the moratorium period, while its decision to not charge compound interest added a minor concern in the banking space. India VIX rose by 0.85%. Among the sectors, Nifty Metal, FMCG and Media ended in the red, while Nifty PSU Bank jumped by almost 2%, Nifty Bank and Private Bank by almost 1% each. Nifty Realty logged a gain of almost 1%. In terms of sectors, buying was seen in banks, industries, energy and realty stocks. The Nifty Mid-Cap Index rose nearly 1%, while the S&P BSE Small Cap Index gained 0.7%. The Nifty Bank rose by 1.7% at 34,184. Researchers said that the markets continued to trade volatile and ended 0.5% higher. After a sluggish opening, the benchmark oscillated in a range. Initially, however, the Supreme Court judgment on the moratorium case lifted sentiment as the day progressed. It was felt that banking might help the index to inch further higher, but negative sentiment due to the rise in COVID cases and mixed global cues would cap the upside. We reiterate our cautious approach and suggest preferring hedged positions. The Supreme Court has finally lifted the interim stay on banks for classifying loans that were stranded as on August 31st as NPAs, that is non-performing assets. With the Supreme Court lifting the stay, banks have now more to clarify on asset clarification. Supreme Court ruling is relief for the banking sector as well as a whole, since banks have been unable to classify accounts as per their actual performance in September last year. What an investor must do tomorrow. The Nifty formed a bullish candle on the daily scale and negated the formation of lower highs on the last 6 trading sessions. Now the index has to hold about 14,750 zones to witness an up move towards 14,900 and 15,000 zones, while the downside immediate support exists at 14,700 and 14,600 zones. The market remained volatile throughout the day but finally closed above 14,800 levels. The 50-day moving average was a major hurdle for the market and is positive for the medium-term trend of the market. Based on it, Nifty could move closer to 14,950 to 15,000 levels. Surprisingly, the support is still placed at 14,750 levels. The formation of a double bottom in the Bank Nifty is working positively. The Bank Nifty is expected to move closer to 35,000 levels and maintain a stop loss at 33,850 levels. The Nifty index managed to close a day above the 14,800 zone with gains of 0.5% and formed a small bullish candle on the daily chart. The index has formed a broader range of 14,500 on the downside and 15,300 on the higher side, and going forward also, we may see prices to trade in the same range. Recently, prices touched lower band and started moving northwards. If current levels are held, then we may see the next leg of rally towards previous swing highs. The Nifty witnessed continuation in the recovery. It has recently taken support near the lower end of a sideways channel. Over there, it had formed a piercing line, a bullish candlestick pattern. In the last session, it had formed an inside bar on the daily chart. On Tuesday, the bar pattern broke out on the upside. The overall structure shows that the index is moving from the lower end of the consolidation range towards the upper end, which is near 15,000 levels. On the other hand, 14,707 will act as crucial near-term support. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop loss and should follow support and resistance level on strict basis. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, please like, share and subscribe to our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Be a part of Goldstone family on Facebook. Views by Goldstone Finvest. Let's build fortune together.